What we have is a failure to communicate. Welcome back to another mortgage rate and news update. Again, I'm Knannini, Millennial Loan Officer out of Phoenix, Arizona, and looking forward to get into some more important information for this week, the first week of February. Let's dive right in. There's two major points or two major pieces of news that came in this week that really drove interest rates up or down and then up. And I'll show you here in the background in a second. But we had the BLS Jobs report, and we also had the Fed meeting. I'll break it down here shortly, and we can dive into kind of the reaction. Now, remember, this is inverse when it comes to mortgage-backed securities. Green and up means that rates are going down, and then red and down means that rates are going up. Ultimately, here we're looking at these five markers for this week. We started off hot, not much news to start the week, but then the Fed meeting came out Wednesday, and they did exactly what they needed to do. They raised the Fed rate 0.25%, just as expected. And then they came out and said, hey, we want to raise the rate two more times. We're going to do it 0.25% each time and going to land right at their December projections. So basically what they're doing is exactly what they said they were going to do. And I love it. Investors love it. We need that. We need stability, and we need to know that we have confidence going into these meetings and nothing crazy is going to happen. The last thing I want is surprises when it comes to interest rates. But we kind of lost all of the gains that we got through the week because of one report that just came out today, this Friday, this BLS Jobs report. So hang in with these numbers are accurate when I say this. We were expecting a job increase of about 185,000 jobs this week on the BLS Jobs report. The number that came in was 517,000. That was not a mistake. That number is grossly inflated. The problem is that was the headline. That's what investors reacted to. And I kind of want to dive in a little bit more on that number. Ultimately, because of this, like I said, we lost most of our gains and we kind of fell back to the position we were in with rates to start the week. Disclaimer, you're probably going to be hearing or seeing reports, people on social media talking about how rates are at 5.99%. That's what they were at yesterday, Wednesday, after the Fed meeting. That is not the case anymore after today's reaction. Just want to give you that live update. That number, we'll get there eventually again, but it is out the window. People will probably be like, oh, it's great. Rates did move back up. I'd say we're sitting somewhere between 6.15% and 6.3% for the national average. And that average accounts for, a 740 credit score and, this perfect file while also paying a point. So remember to keep that in mind when you see those averages. But that's kind of where we sit when it comes to rates. But let's dive into this jobs report here. So here I have this from CNN Business. Look at this. I mean, we were trending down since August on jobs created. You keep hearing this doom and gloom of, we're cutting jobs, we're not hiring. And then you see a number that we created 500,000 jobs. There's a little bit more info to this, but ultimately what I can say is this $517,000 number is truly not accurate, especially like I said, when you're thinking we're going into a recession, jobs are getting cut. This doesn't make sense. A lot of those jobs were part-time, but a big factor here is we have the BLS report, and then we also have the housing survey. And the housing survey is the more accurate number, and I'll show you how they broke this down. There's a new metric that came in here in January. Again, I don't know this number to a T. Brand new to me. I'll admit it here. 2023 population control effect. I have to do a little bit more research to see how that is totally calculated and how it plays a factor. But please look at the highlighted section from MBS Highway today. We have December to January change of 894,000 jobs. Well, this new metric they put in is accounting for it's almost a subtraction, 810,000. The true job creation was 84,000. So we're seeing over a $400,000 or 400,000 job gap, grossly misstated. And I'm hoping investors see through that here in the next few days. I wouldn't be surprised if we rally back and rates come back down a little bit, but they're going to dig into these numbers. That number's not completely accurate. And we're going to get to the bottom of this, but let's go back and check out rates. Like I said, we stayed pretty stagnant. Those were the two major pieces of news this week. And then coming back, there was one more piece of news I wanted to share. It was from the November Case-Shiller Housing Price Index. It shared overall home depreciation, or the fall from the peak of the market. Peaks about June of 2022. So as of November, 5 months after the peak, home prices nationally fell 3.6%. That's a long ways from a housing crash. Of course, there's other areas that see a bigger drop. Here in Phoenix, you might see something like 10%. And I've seen that. That doesn't surprise me, that 10% number looking at houses. But across the nation, we're looking at 3.6% as of November. Sure, it might come down a little bit more, but we are not heading into the crash. Like, we're seeing these numbers. We know inventory is low. Like, we do not have enough on the market to supply the people who want to buy them. How can there be a crash? That's as simple as I can put it. But those were the biggest pieces. It's almost like nothing really happened with rates, with a lot going on still in between. We're still in a good spot. We're still at a 4-month low when it comes to interest rates. But the one thing I would pass along to any home buyer, any realtor out there that wants to, just a talking point, we are going to get back into a bigger buyer demand. When those rates get into the fives, buyers are going to come back. People are going to start listing their houses again. We're going to get a little bit more inventory. But that buyer power is what's going to create a little bit of a frenzy. And I think it's between now and I would even say May is a great time to purchase a home, taking advantage of a little less competition. We are still seeing multiple offer situations right now, which is great to see. I think a lot of people came out in 2023 and said, I'm buying a home this year. So take that into consideration with trying to figure out when to buy. I'd be always happy to help anybody who's wanting to get pre-approved, or if you have someone that needs pre-approved. You can always send me an email, reach out if some of you have my number. Would be happy to help any way I can, and go through the strategy of why buying now before rates come down, before that competition, and then before home prices go back up. So be great to get into a home and then still access those lower rates when the time comes. But that's what we have here, February 3rd. The big pieces of news, the movement in rates, and just the overall news. Don't forget to subscribe, hit that like button, do whatever you want to do here on YouTube. I would truly appreciate it. But thank you for tuning in, and I'll see you next week.